This is your LMAX Exchange technical update for Tuesday, June 27th, 2017. Euro dollar. So the euro continues to show signs of potentially stalling out in 2017 after putting in a fresh 2017 high that was seen the other week, just shy of 113. At this point, though, the market would need to take out support at 111.10 to suggest that the market is topping out for now, which would open the door for a measured move downside extension to 109.25. But if we get down to 109.25 and if we break down below 111.10 and we get to 109.25, the market would still be within a well-defined uptrend in 2017, looking for that next higher low in favor of a bullish resumption, eventually back towards next key meaningful resistance in the form of the August 2016 peak at 113.67 further up. Right now, a higher low is in place at 108.40 in this uptrend in 2017, and that low that was seen on the 11th of May would need to be broken to compromise the current bullish structure on a medium-term basis, that is this 2017 move. Otherwise, the uptrend remains firmly intact. But right now, the question is whether we see this correction play out, and if the market breaks down below 111.10, that will happen, exposing a move to 109.25. If not, then we see a more direct test of that August 2016 peak at 113.67, which then takes us up to critical longer-term resistance here between the 114 to 117 area. Sterling dollar. So cable continues to consolidate after recently breaking down below that key previous range high at 127.75, which had done a very good job capping gains since the market put in that plus 30-year low back in October of 2016 at 118.40. There is still risk, though, since this pullback, to see additional declines that could take us down to the 124.50 area. But overall, that breakout above 27.75 in April was significant and suggests that the market is now in the process of putting in a longer-term base, which could take us up towards that next measured move extension over the coming days and weeks at 135. Only back below 123.60 would compromise or delay this newly adopted constructive outlook. Dollar yen. So dollar yen has been bid up after once again stalling out into setbacks. This time those setbacks stalled out ahead of the 2017 low from back in April, and the market is now bouncing, looking to potentially establish above some key short-term resistance at 112.13. But overall, the downtrend here remains intact even if we break above 112.13, with a break above 114.37 really required to force a shift in the structure, and so rallies should continue to be very well capped at this point. And again, only back above 114.37 would compromise that outlook. Euro Swiss. So Euro Swiss hasn't really been doing much in recent trade, but the most important thing that it's done of late over the past few weeks is stalling out ahead of a critical psychological barrier at 110, which defines this market as far as where it's trading structurally. While below 110, the overall structure favors the downside, and we could see a retest of recent range support around 106, just ahead of 106. And a break back above 110, however, would negate that outlook and put the focus on the top side, forcing a more meaningful shift in the structure. Aussie dollar. So Aussie has come back up recently to trade above 76, but is finding some good internal resistance into the 76 area, and so rallies are expected to continue to be well capped here ahead of what could be that next major downside extension back towards multi-day lows, which come in around 73.30. At this point, it would take a close above 76 to delay that bearish outlook and potentially expose a more significant upside move towards critical resistance in the form of that 77.50 2017 high and 78 just above, which has been a very strong level of resistance over the past several months. Dollar CAD. So dollar CAD setbacks are finally stalling out after this latest impressive decline, and the market should be looking to resume a broader uptrend here. A pushback above 133.48 would be required to strengthen that outlook and accelerate gains, and the market could then be on pace to retest the 2017 peak at 37.94 and break up towards and above 140. At the other hand, if we do see setbacks from here, they expect it to be very well supported into the 130 area, with only a breakdown below 130 to compromise that outlook. Kiwi dollar. So the New Zealand dollar has done a very good job rallying out from 2017 lows, with the market pushing up above 72 recently and even above 73, though at this point there is some solid, meaningful medium-term resistance up around the 73 area, and so there is risk that the market stalls out yet again in favor of the next downside extension. Look for a break now back below 70 71.85. That's the low that we saw on the 15th of June to strengthen this outlook and accelerate those declines back towards the 2017 low at 68.18. Only really above 74 at this point would compromise the outlook, the overall bearish outlook for Kiwi dollar. SPX 500. The S&P 500 continues to consolidate above 2,400 following this latest break to fresh record highs, and this does leave the door open for a measured move extension towards 2,480 over the coming sessions. At the same time, there's a lot of strong resistance, a confluence of strong resistance up around those levels, and the market could be poised to top out. Nevertheless, the market would need to see at a minimum a break back below 2,400 to suggest a potential or to alleviate immediate topside pressure, while a break below 2320 would be required to officially force a shift in the structure. Gold. So gold has seen a nice setback over the past several days, and on Monday the market saw those setbacks extend into the 1230s. But overall here, if we look at the trend over the past several months, and certainly in 2017, and looking back to 2016 even, the market's been basing out, putting in higher lows and higher highs, and the overall structure continues to favor this market being well supported on dips in favor of additional upside now beyond 1296, the current 2017 high, and towards a retest of the 2016 peak at 1375 further up, only at this point back below the 1214 low that we saw on the 9th of May, which is a confirmed higher low, would give reason for a reconsideration of this overall bullish outlook right now for gold.